Ed, the consensus is that Jay Powell is considering maybe sticking around, keeping his governor chair, even though his chairmanship is going to be ending next year. But you actually think that he would leave running the central bank earlier than his term ends?
Yeah, Anne Marie, I think the real question is that once you have a selection for chair, if the president has kind of nominated someone, if the Senate approves that individual, and maybe look at kind of Steve Myron's term, it ends on January 31st. So there's going to be an open slot if it is Kevin Hassett. If the Senate has confirmed that the replacement, is that person the new chair? All of the conversations that we were having about will Trump fire Powell, one of the only ways that there was a consensus out there that you could potentially replace a chair is if the president has appointed and the Senate has confirmed a replacement. Now, Jay Powell's term would have ended earlier than May 15th if Biden hadn't delayed in renominating Powell in the first place. And so I think this is going to be the conversation that speeds up pretty quickly here is there going to be a 5-6 month lag between an appointment and a confirmation? I don't think that the Trump administration is going to be okay with that. I think there's going to be a lot of pressure on the Senate to appoint and confirm that new chairman, trying to speed this up. Jay Powell can stay as a governor. His term goes until 2026. He'd be the first chairman since Eccles to do that. I still think that there'll be some kind of desire for him to step aside at some point. But I think the real question is, when does the chair actually get confirmed by the Senate?
So let's look at who potentially is going to become the chair. Obviously, right now, all arrows are pointing towards Kevin Hassett. I'm sure you've seen the reporting. I'd love to understand how you are reading these tea leaves. Do you think the bond market, or at minimum bond investors that the Treasury Department is talking to, will get a vote?
I think what we will see is the market will always test a new Fed chair. What I have been viewing is, we got this leak about a week or so ago. The market reacted okay to that. Now a conversation about, Bessent could be the NEC chair. It's another trial balloon, Anne Marie, to see whether or not there is a negative or kind of muted market reaction. The more muted the market reaction is to this drip, 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 the more chance and the higher probability it is that it is going to be Hassett. If there were kind of a big negative reaction, I think that could be what spooks President Trump and maybe pulls back. But I think that these stories that are coming out are only positive for his candidacy at this time.
Ed Mills of Raymond James, thank you so much. And I would ask Nela how much, from an economic perspective, rate cuts will actually do when it comes to dealing with some of these affordability issues, because we're talking about this as though it's the silver bullet. And I just wonder, is it that? Is it $2,000 checks? Is it something else? What exactly is going to do the trick?
Traditionally, the way that the Fed policy hit Main Street, including a rate cut, is through the housing market. And that, I think, it's agreeable. Housing has become expensive in the United States, and that channel for low-income households isn't there in the same way, especially for young people. We're seeing the average age of a homeowner creep up because it takes much more equity to put down on a house now than it used to. And rates are higher than we enjoyed in the early part of, or the late part of the 2000s. So we're having this conflation of demographics. There's a lot of people who want to buy and not enough housing stock. This is a chronic problem. So that channel is shut down. So to your question, one of the key channels of Fed policy into Main Street isn't really working that well. Now, there are other channels. There are other ways to get to that low-income, middle-income consumer, but it has to be much more deliberate than it has been in the past because we don't have the housing answer that is an easy story for wealth creation in the United States the way it was perhaps in the 90s.